G'day traders, and welcome to the end of the week of trading. Okay, so the markets at the moment are trading very bullish. Let me rephrase that. Actually, the markets have been trading super bullish at the moment. And the market that has been getting the most headlines and the market that has obviously been that is outperforming most other markets is Bitcoin. So Bitcoin this week finally went through yesterday that big 100,000 psychological and technical barrier, and we've traded to a new record high of $104,000 in Bitcoin. So look, the Bitcoin bulls and the Bitcoin community, can thank Trump for this phenomenal rally in Bitcoin. On Wednesday, Trump announced his new nomination for the SEC, the Securities and Exchange Commission chair, a guy called Paul Atkins. He will replace the very unpopular current SEC chair of Gary Gensler on the 20th of January when Trump is inaugurated. So the nomination of Paul Atkins is seen as very favourable to the crypto community because he's looking to foster and promote crypto innovation in the US and give more relaxed regulation than what the previous SEC chair did. So anyway, since Bitcoin did go up to 104,000, it did not last long there, and we're actually currently seeing it down almost 10%, down towards 94,000. So one of the things that I was suggesting, when we've spoken previously about Bitcoin, that the gains around 100,000 and above obviously are going to be very hard fought. Being fresh long at these levels certainly is not the best levels to be long Bitcoin. Like a lot of the money's been made when you've seen already in since November almost a 40% rally. Having said all of that, the Bitcoin bulls obviously did get excited about this breach of 100,000, and their targets further out now is up towards 120,000. So it'll be interesting to see how this plays out. Okay, so moving along, another market that's been trading exceptionally bullish is obviously US equities, the NASDAQ and then S&P, almost on a daily basis keep making new record highs. And the reason for that is at the moment is that the equity market is not scared of anything. For the equity markets to trade lower, they need to be scared of something. And at the moment, you've got a US economy that is doing exceptionally well. It's positive. Equity market is looking forward to Trump being in power early next year. Trump being very pro-business and very pro-equity markets. Equity markets are also looking forward to the end of the year where we have the Santa Claus rally. Seasonally, equities always do well in December. And finally, obviously on the 18th of December when we have the FOMC, the market is still pricing a very good chance, around 70% of the Fed fund futures, that they will get another cut from the Federal Reserve, and equity markets love interest rate cuts. So look, buying the dips has been probably one of the best trading strategies in all markets for equities. Over buying the dips in equities over the last couple of years, with US equities now being up a staggering 50%. So yes, even though we are at very lofty levels, it's very hard to find a case to sell equities at the moment unless we see a fresh catalyst. So moving along, the currency markets in the last month or so, we've seen a very aggressive rally in the US dollar, with the dollar index spiking from 100 all the way above 107. That rally in the US dollar at the moment has stalled at these multi-year highs. And what we've really seen in the last couple of weeks is range trading in the US dollar. So we haven't seen any more directional breakouts or any trend change. So if you have been, if you are a range trader, certainly you would have enjoyed the last couple of weeks in the foreign exchange markets. Having said that, that could change tonight because tonight we have some very important data out. We've got the non-farm payrolls data that comes out. Now, market is expecting for that headline number to come out around about 200,000 new jobs added. Unemployment rate is expected to go from 4.1% marginally up to 4.2%. Now, one of the shining lights of the US economy has certainly been the robust and strong labour market. It has been one of the reasons why the Fed hasn't needed to aggressively cut rates. So look, I would imagine if the numbers come out tonight as expected, it's not really going to trouble the market or expectations on the Fed too much. So we'd need a number that comes out like well above or below expectations. So if we do get a number that comes out well above expectations, so I'd suggest somewhere 250 plus towards 300,000. Maybe traders will start repricing that Fed meeting and thinking maybe we don't need that rate cut. Certainly that would change a lot of things in markets, and obviously we'd see bond yields higher and the US dollar would retrend. Look, I'd give that outcome probably a low probability. The other outcome, obviously, if we see payrolls come out well below expectations, so we get the unemployment rates spike up above 4.2 towards 4.3, and the payrolls maybe below 100,000, then obviously traders will cement that rate cut for the 18th of December by the Fed, and we would see bond yields a lot lower and obviously a sell-off in the US dollar. So look, payrolls always gives the market a lot of volatility. We haven't seen that, as we're discussing, in the currency space for the last couple of weeks. So no doubt, need to be focused for that tonight. Good luck with it all, and we will check back in with you again next week.